Stock market surge. Dow jumps over 300 points after strong jobs report. Here's why the stock market hit a major milestone, and why this could spark heated debates among investors. On Thursday, July 3, 2025, U.S. stocks surged after a surprisingly strong jobs report, sending the Dow Jones Industrial Average, S&P 500, and Nasdaq Composite to record highs. But here's where it gets controversial. While many see this as a sign of economic resilience, others wonder if the market is ignoring underlying risks. Let's unpack what happened and why it matters. The numbers tell a story of unexpected strength. The U.S. economy added 147,000 jobs in June, far exceeding the 110,000 economists predicted. The unemployment rate even dropped to 4.1%, defying expectations of a rise to 4.3%. This data fueled optimism that the American economy is weathering turbulent trade policies and global uncertainties. But this isn't just about job numbers. It's about how these figures influence the Federal Reserve's next moves. The jobs report also sent Treasury yields soaring, signaling that investors now expect the Fed to keep interest rates steady. Fed funds futures traders now price in a 95% chance the central bank will hold rates at its upcoming meeting. Analysts like Jed Ellerbroek of Argent Capital Management argue this means rate cuts are unlikely this year. The Fed isn't cutting rates in July, and even the possibility of a cut this year is uncertain, he said. But critics ask, is the market overestimating the economy's durability? Meanwhile, President Donald Trump's recent trade deal with Vietnam and his looming 90-day tariff pause deadline added another layer of complexity. While the jobs report eased fears of an economic slowdown, investors remain wary of Trump's unpredictable approach. Ellerbroek noted that while tariffs could disrupt businesses, the market is digesting these challenges. But is this optimism justified? Or are we seeing a bubble fueled by short-term gains? Beyond the big indices, individual stocks had their own stories. Renewable energy companies like First Solar and Enphase Energy jumped after the Senate passed Trump's tax megabill, which removed some clean energy taxes. Cybersecurity firm CrowdStrike surged 4% after analysts raised their price targets, while chipmakers Synopsys and Cadence Design Systems gained after U.S. restrictions on exporting software to China were lifted. Yet, not all stocks fared well. Centene hit a 52-week low, highlighting the market's mixed performance. The S&P 500 and Nasdaq Composite closed the week with gains of 1.7% and 1.6%, respectively, while the Dow rose 2.3%. But this rally came amid a shortened trading session, with markets closed on Friday for Independence Day. Even as the market celebrates, questions linger: will this momentum continue, or will the next data release trigger a correction? And how will Trump's trade policy shape the coming months? For beginners, it's important to understand that strong jobs data often boosts investor confidence, but it also raises concerns about inflation and policy shifts. The Fed's decisions, in turn, can either fuel or cool market rallies. As one analyst put it, the market is listening to the numbers, but what happens next depends on how policymakers respond. So what's your take? Do you think the current market optimism is well-founded, or are we missing red flags? Share your thoughts below. This is a topic that's sure to spark lively debate.